Okay, so we are live on Facebook. I'll do my best to answer any questions. If you have any questions, go ahead and drop them in the chat, and I'll do my best to get that over here to Zoom. Why don't we get started? What do you think?
So I'll go through just basically car washes in general and where they might be a good fit in for your portfolio. And you
Okay,
guys definitely feel free to ask questions. I'll answer what I can in line with the presentation, and then we can wrap up here towards the end with more questions. We do
sure.
have a live deal open right now. So, for people who are like, as we go through, if they have specifics, like, okay, I like this, I think it fits. If we want to talk about a specific deal, we can do that. I just like to kind of say that towards the end. But
Sure.
so if you guys don't know me, my name is Whitney Elkins-Hutten. I'm the director of investor education here at passiveinvesting.com. And you might have run into me either through the education that I do here or the education I do at Ashwell. Both places I'm heavily partnered in various spaces of the real estate space. I'm constantly partnering. I think, Alex, you and I met through a mutual friend of mine, ours,
Hmm.
Amanda Hahn. So
Yeah.
uh, I see people everywhere at conferences. But, just me, this is the whole reason why I have, taken upon myself to build a real estate portfolio that can replace my time and the time that I trade to work. And it's not because I don't like working. I still work. I work very hard. I probably work harder than ever. But, really, I got into real estate investing as a way for me to create financial freedom for myself, but time freedom and choice freedom. And so I can spend it with my family, travel, just create the impact that I was meant to create in the world. Now, I started off real estate investing in 2002, and I started off as accidentally as a live-in flipper and house hacker. Those are terms back in 2002. Those terms didn't really apply, but thanks to bigger pockets, we've got some great marketing around real estate these days. But essentially, I had bought a house with a significant other, and then about a month later, the relationship fell apart. And I had the house under my name and all the expenses, and just terrified on whether I was going to be able to afford the place. And so I stuffed it full of roommates, completed the rehab on the property, and 11 months later sold it. And then that's when I realized, oh snap, real estate is an amazing way for me to not only build cash flow for myself, but also create nice bumps in equity and keep a lot of that cash flow and equity growth tax free. But anyways, I just thought it was an amazing avenue for me to continue doing what I was doing in the health arena. At that point in time, I was working for the CDC as an epidemiologist, working on the bioterrorism grant. And later went into community pharmacy, some private and national government organizational work as well. But that was my heart's calling, but it wasn't actually going to get me to financial freedom. I was still going to find myself trading time for dollars. But as this kind of what started off as a slow growth towards building my real estate portfolio in the background while working my profession, it all of a sudden dawned on me. I'm like, man, I really can replace my income with this, and essentially get to do what I want to do personally. Keep it as my profession, but use this facility as growing, active real estate, passive real estate, in order to create financial freedom for myself and my family. So fast forward today, we have over 6,500. This is my husband and I individually, as a couple, I should say. 6,500 residential units, 2,200 self-storage units, and 13 express car washes. We have a myriad of other investments, but most of it is real estate. And really, at the end of the day, what this allows us to do is have 100% choice on how we spend our time. And that's what most people are after, right? Like almost every single group I go into, it doesn't matter what the profession, physicians, dentists, lawyers, to high income net, high net worth, like tech workers or something like that. Everybody's trying to figure out how can they have that choice, that freedom of choice in their life. And this is something that we can help you do at passiveinvesting.com. I'll give you a couple different ways for you to reach out to me if you want to have more of a conversation. But this is what we do. We do multifamily, we do self-storage, we do express car washes. We also do have a first position lien real estate debt fund for those people who are not so much into equity investments or want to build out a nice balanced portfolio. But again, at the end of the day, what most people are after is 100% choice on how they spend their time. Now, that was a little disclaimer here. What we're going to go over today is not financial advice, legal advice, tax advice. So if you think what we talk about today might be a good fit for you and your portfolio, obviously consult with your investment team before you invest. Now, just out of a show of hands, if you guys go over to the chat box, I would love who here knows about express car washes? Who here has like invested with them before? Like they understand, how they can help you grow equity. They you understand like how they can create cash flow, or just even what you're go to the chat box. Let me know like what is your impression of car washes? This is usually where somebody busts out the movie Friday. They were like, my only context of car washes is watching the 1990s movie Friday, which doesn't actually paint car washes in the best light. Anyways, so hopefully by the end of today, you'll have a little bit better orientation how these might fit in your portfolio.
I
But
never even knew you could do that. That's something crazy and pretty cool, actually. So
yeah, yeah. Well, let's talk about why that is. So there's really four different types of car washes. So if we kind of like lay them out on continuum, the first type of car wash is where you drive in and it's like a cement bay and you're the one washing your car. You're dropping your coins in or scanning your credit card. You're getting the wand, you're getting the foam brush, and you're scrubbing your car down. Those are the DIY type car washes. There's usually only like a bay of like 6 to 10 on any one block for these. So there's not a lot of scalability here. It doesn't take a lot of your time. Then you got the in-bay automatic, and this is usually for a cost center, an added cost center, an added way to generate income for like a self-service gas station. You can pull up, gas your car, drive it around back, drive it through a short little tunnel, and they earn another $6 or $7, or I guess nowadays like $10 off of you if you wash your car there. Now that's automatic service, but if you're like second or third or fourth person back in line, it's anything but convenient for you. You're going to leave and go do something else rather than sit there in that line, because now it's become less efficient for you to sit there and wash your car. And then we swing the pendulum back the other direction. We have our full service car washes. This is where you might drive onto a facility and you've got our army of people ready to vacuum and clean out your car, and it goes through a short tunnel. And then you got another army of people at the end to wipe down your car and make them all nice and shiny. Now, you're not getting any bells and whistles. You're probably not getting many like tire waxes or anything like that, undercarriage wash. And it's usually pretty, fairly quick. It might take you about 20-30 minutes to get in and out of one of these places, but you get a nice high touch service. Now, where we're invested in, and what you're probably seeing pop up quite often these days, is the marriage between an in-bay automatic and a full service type car wash. So think of it as like, how can we deliver the efficiency of Chick-fil-A and give the high customer service of Chick-fil-A all in one? So anyways, that is the express tunnel car wash. So essentially you'll drive on a facility and you'll probably see a bay of like 30 or 40 vacuums. Now, depending on your membership level at this express car wash, you go in and vacuum out your car if you want to that day. Maybe it's included, maybe you have to pay extra, or there'll be somebody there to vacuum out your car for you. And then you'll drive your car into like a 60 to 80 foot long tunnel. And that tunnel is taking care of everything: pre-wash, wash, waxes, undercarriage wash, tire shines, everything. It's taking care of everything that is related to your membership. And so what these places really lend to is, again, a highly automated service, but as high touch as we can possibly get it, and very technologically laden. So meaning we know down to the barcode that somebody is scanning either off their phone or on their car exactly what level of service that person is signed up for. And sometimes they don't get a wax like every single time they come through, but the tech knows that, and so maybe every fourth time they come through they get a wax. So they haven't been in for like a couple months, they come back in, guess what, that's the fourth time they get a wax. So we get to leverage a lot of technology in order to deliver the best service possible. So this model is also the only model out of these four that actually scaled very efficiently. Okay, so with our full service, you might wash about 200 cars a day. That's if you're super, super busy. An in-bay automatic, you're lucky if you get 40 or 50 cars through a day. With an express tunnel, you can get 400 to 500 washes completed in a day with just 2 to 3 full-time employees. So again, very very highly automated service, but also it's one that scales efficiently, both as a business plan, but also when we talk about how can we boost income as for the investment itself. This is the space we want to be in. So that kind of gives you an idea of the four different types of car washes. Let's talk about the industry in general. So the industry in general, this is a $33 billion and growing industry. And the industry overall for car washes is growing at about 4% a year. But just specifically this asset class, the express tunnel car wash, is growing at about 8% a year. So it's one of the fastest sectors, that's growing, business sectors that's growing. Now, for us, how we are crafting our portfolio is that we're looking to consolidate these fractionalized business owners before big money gets in, because big money does not want to be involved right now because there is no third-party management. So if Blackstone went and started snapping up a bunch of car washes, guess what? They're now our owner operator. They have no third-party management to place it with. Because of that, that gives us a business problem to solve, but also gives us an opportunity to enter the business before big money gets in. So it's a very fractionalized business. A lot of people are building from the ground up with the hopes that they can scale to 5 to 10 locations, but really less than 15% of owner operators can ever get above 5 locations, meaning they are owner operators. They are heavily involved in the day-to-day operations of their business. They don't have any regional management. But for us and our buying power, we're able to come in and start consolidating a lot of these people that want to exit, and get good pricing on these assets. And just kind of overall, how I've already described what express car washes are, you can see how it's a low operationally intensive business with really high cash margins. And we're talking, margins are somewhere, like, depending on the operations, 40 to 60%. We run at about an average of 57% for our operations. That's our target. Now, let's talk about the customer, right? So we've talked about the actual car wash type. We've talked a little bit about the industry as a whole, but what the customer ultimately supports the business, because that's what we're investing in, the cash flowing business that happens to be attached to a piece of real estate. Well, the average car owner, I think it's like 82% of the people in the United States own a car. And of those people that wash a car, 75% or 72% of car owners use a car wash and prefer an express car wash as their car wash of choice. And the average car owner actually washes their car 13 times a year. Okay, that's an established behavior. So this makes it a pretty recession resilient asset class, just by pure nature that once the behavior's established, people don't give it up very easily. It's also recession resilient from the aspect that a $25 a month car membership that actually takes care of the very vehicle that somebody needs to get to and from their job, and haul the kids around town in, right? They're going to take better care of the car oftentimes than they will their house. And the car itself is often, when times are tough, you actually have to take better care of your vehicle because you can't, sell that vehicle. You can't enter into a new car loan. Maybe there's not new cars available like we saw during COVID. I know we got stuck in our car for about 9 months, not able to exit out of our car when we wanted to upgrade, just because we couldn't during COVID. There just literally wasn't a car ship. We couldn't buy a new car. All right. So that gives a little bit of insight into the customer and what their mentality is. We actually see car wash usage go up in kind of tough markets. Like we saw that in 2007, 8, 9, 2011. We definitely saw that explode during COVID. And we're actually starting to see an uptick in that now. All right, and we've already talked a little bit of the asset class in general, like express car washes. But again, just to kind of put a pretty bow on it, we're in the early consolidation, moving from mom and pop owners that have 1 to 5 location into this other type of business ownership where, either large groups are coming in and consolidating the fractional ownership, or you're seeing a lot of ground up construction through franchises. Now, only one of those ownership structures actually yields a large exit, and it's not the franchise model. But this business as a whole is very scalable. It allows the investor, if you can start consolidating these locations and solve that third-party management, move from linear to residual income in a high cash flow business. We can leverage a lot of technology in order to create operational efficiencies. And I always like dropping this in here is that car washes, I think, at least my perception of them originally was like they were water guzzlers. And like for me, I'm very environmentally minded. When I started learning more about car washes, and like the ones that have been built in the last 5 years or have had their equipment upgraded in the last 5 years are more environmentally friendly than if you washed your car in your own yard, because we are able to reclaim that water, reuse it multiple times, and we don't send the chemicals used to wash the car down the drain. So, all right, so that kind of gives like a good overview. What I like, in these type of presentations is leading people through how to invest in a car wash, because that's ultimately at the end of the day, somebody's trying to figure out, how do I underwrite a deal? How do I know what's a good deal? Now, I'm going to give you a lot of bullet points, and you can take these bullet points and create a large checklist for yourself. But I like bucketing the checklist into 7 areas, because really any due diligence list that you are using to evaluate an asset, whether it's car washes or multifamily or self-storage, you're trying to answer 7 questions. So let's talk about what those 7 questions are. You're trying to figure out what are the 7 ways that I'm going to either build my wealth or protect my wealth. That's simply it. So we're going to go through, I'm going to kind of walk you through this model. Maybe you haven't kind of thought of your due diligence in these buckets before, but you're trying to understand, how does this asset, how is it going to protect my capital, build cash flow, build equity, and generate tax benefits for me? And then how does it hedge inflation, utilize leverage wisely? And then I'm going to, tease you guys a little bit until the end. There's another rule in here that we need to make sure that we're evaluating. So how to invest in car wash? Like, let's just high 30,000 foot view level. We want to make sure that any asset we go into right now, especially in this market, it helps us preserve capital, right? Warren Buffett's rule number 1. Don't lose money. Rule number 2, see rule number 1, right? So, this asset, even though you might look at it and go, wow, it generates like a high amount of cash flow, that's crazy. It actually, because the way we're purchasing the asset is we're consolidating already operational businesses that have strong T12s, trailing 12 performance, and we're making them better. More specifically, we're buying these businesses in growth markets where all those investing cards are already stacked in our favor. The population's growing, incomes are growing, household income's growing, jobs are growing in the area, jobs are diversified. So much like that, how would you preserve capital with any other asset class like multifamily or self-storage? The same things would apply here. But because express car washes are an asset that you can't move, and they're very business intensive, we need to understand location, right? We take these into account when we look at multifamily and self-storage, but this is even more so. You have to be on the right in the right metropolitan service area, in the right submarket, down to the right street corner with the right traffic count coming back past you, at least 20,000 vehicles a day, and 20,000 vehicles that can make a right-hand turn into your facility, right? So those are, when you look at how do you underwrite a deal like this, you want to make sure that you're looking at assets that meet those parameters. But for me, I like looking at acquisition strategies because I want to know, I'm not saying it's wrong. You can certainly invest in ground up construction. We do some ground up construction ourselves, but for me, I really like looking at assets that are already stabilized and performing. Cash flow. How does the asset protect my cash flow? What about that asset will allow it to do that? Well, first things first, understanding the 4 different types of car washes and which one is going to have the less operational overhead and be able to ramp up quickly, okay? And that is the express car wash. Remember, we can do 400 to 500 car washes a day with about 2 to 3 full-time employees. Okay, now this is where we start to kind of go back and forth and differ a little bit, is the investment strategy. Like for us, we really like to focus on direct ownership, where we own the land and we own the brand. Okay, we're not investing in franchise opportunities where we may or may not own the land. That we're de-risking the profit and loss statement that way. We're not leaving it to chance on land rents going up, or some landowner to sell the land out from underneath us and build an apartment building on it, right? Like, we own the land. But more importantly, we want to own the brand. Okay, we don't want to be in a franchise situation where we have intra competition across town, where we've got maybe there's a Bobby's car wash. Okay, I don't know if that brand exists. I'd be shocked. I don't know. But like, if you own one Bobby's across town, I own another. Maybe I don't run mine as good as yours. Okay, so I bring down everybody's expectation of Bobby's. Okay, we both suffer. Or maybe you own on the east side of town, I own the west side of town, and we have a line drawn in between us, and we can't market over that line, right? So you're losing out on market share. Because we own the land and own the brand, we really de-risk the business plan and the portfolio that way. All right, now tax benefits. So when you invest in a car wash, right, you can do it from a ground up a ground up development strategy, which, like if you were developing a multifamily building or single family residence, it's kind of like flipping. You don't have any tax benefits to that, okay? You have to hold it. So that's, these opportunities that I'm seeing out there that are franchised and they're doing ground up development, they have to flip it to themselves in order to realize any tax benefits. And those tax benefits generally don't come for like 2 or 3 years. But when you do an acquisition strategy, we can tap into that depreciation in year 1. And essentially what we can do, just like you would on a multifamily building or self-storage, we can perform a cost segregation analysis and accelerate forward all that, any losses that would occur in the first 20 years to the first year of the asset. Okay. Or at least 80.
It's very similar to like multifamily or anything that we're doing, right? With the cost tag.
Very similar, but there's a twist, and it's a twist that works in our favor. And the twist is, so think about it. In multifamily, can you write off the building in year 1? No, you have to break it all down into its components. Some of the components are like, have a 15-year schedule, some of them 20, some of them 25, right? In a car wash, an express car wash, the building is essentially a piece of equipment. So we can now, that's how we can hit these 70 to 90% year 1 losses, because that building gets reclassified.
Oh my gosh, this is genius.
Well, but okay, hold on, guys, right? Like, for those of you who are real estate professionals, you might be like, woohoo, 79% year 1 loss. I'm going to take that to the bank. Well, remember, it's a high cash flow asset. You got to have a strategy for years 2, 3, 4, and 5, whenever the cash flow starts ramping up, right? You're going to consume all those losses. But for those people who have like, W-2 jobs, guess what? Like, you can suspend those losses moving forward and use that to continue to protect the cash flow. To me, I don't see that as a negative at all, right? Like if you're in the game as a real estate professional to utilize losses, you're going to keep investing to continue to build up that bucket of losses, right? That's your whole strategy. But yeah, we get to take advantage of accelerated depreciation and bonus depreciation. As bonus depreciation starts ticking down, we have a different strategy where we can take advantage of 179 depreciation, but that recharacterizes how those losses can be used across your portfolios. So we try, we're really going to try to stick to using bonus depreciation until we really have to make that switch. Inflation hedging. Now, most of us think of inflation hedging as how can we lock in the loan at a low rate now and let the inflation of the dollar erode away that debt. That still applies here, right? We can still get nice long-term, private financing and, like a 25-year amortization, 5-year interest only. We can fix that debt rate, for the first 5 years. So we can still take advantage of those type of things. But the other way I encourage people to think of inflation hedging is how often can you adjust the income and expenses as they pass through to the customer. Now, we already have something baked in here. Remember, we're trying to move our customer from an individual pay to a subscription model, okay? Now, just think of it this way. It costs 80 cents to $1 to actually execute a car wash. The average person who utilizes our car washes utilizes their subscription agreement 1.8 times a month. And so let's just say it costs them $2 to wash their cars. And we're charging the lowest subscription $25. We've got a nice cushion and hedge in there. Now we still have to pay, CapEx maintenance, we still have to pay the full-time employees, but we've got a lot of margin in there in order to pay that overhead and expense. Then the other way we can also kind of hedge inflation is that we can actually adjust operations, meaning maybe before we even bump up our cost of our subscription, we actually start seeing how can we fine tune and optimize that tunnel to utilize water better, utilize the chemicals better so we don't have to purchase as much, utilize electricity more efficiently, okay, and reduce our costs that way, okay? So those are just some ways that we can actually like help keep the cost as low as possible on the property. Everybody's friend equity, everybody's like, hey, I'm in it to make money. How can I do this? Well, we're going to talk about how to do this passively. One of the cool things about being in this industry right now is that, again, if anybody was in, buying self-storage buildings, like back in 2006, 7, and 8, it was like the secret. Nobody knew about it, right? You were like, I need to snap up all these buildings before, big money gets in, because the same thing was happening then. There was no third-party management for self-storage building. We're in the same phase of business right now. In that early market consolidation, we need to solve the lack of third-party management. We're going to do that for ourselves. I'm sure other people will follow suit. But until that is reliably solved, we have a very great window here to acquire as much property as possible before big money gets in. Then the other way we can think of equity is how can we impact the value of the asset. So most of you, it sounds like here, are accustomed to investing in multifamily or self-storage. So the value of the asset is essentially the net operating income divided by the cap rate. That gives you the value of the commercial asset. Well, here value is determined a little bit differently. It's going to be a multiple of your expected gross income, or EBITDA, okay, earnings before depreciation, interest, taxes, and amortization. Okay, that is a big word, profit. Okay, just think about it. It's a multiple on your profit. Okay, but how do you increase your profit? Well, guess what? It's the same three levers, the same three ways you would do it in multifamily. You figure out a way to increase your income. We're going to do that by subscription models, adding more customers. We're going to decrease your expenses. So we're going to create operational efficiencies there, many of which I've already named. And then we're going to add additional streams of income. And how that looks like, at least for us, I mean, there are operators out there that are like, charging for vacuuming and charging for scents. That's, the fragrances that you use in your car. That's cool and all. They're choosing to create their additional streams of income that way. For us, we're choosing to take an amenities approach. We're trying to make that higher subscription agreement, the second tier, more valuable by adding in free vacuums and free scents, and maybe even a free dog wash, right? A lot of our facilities, we can go in and retrofit for a minimal CapEx investment and put in a dog wash. Now, I have an 80-pound puppy. And there's nothing more painful than taking an 80-pound puppy who's been playing at the dog park and putting her in a clean car. I want my puppy clean before I put her in the car. And so it takes like $200 to install a dog wash and a hose, and you can go in and like wash your dog while your car is getting washed. It's pretty amazing. Now, so those are kind of the ways that we can play around and really impact the value of the asset. And when we do that, for us, we're scaling 150 to 200 units, but we're scaling through acquisition. We'll do a little bit of development, to complement that portfolio. But the way we are looking at exiting, I think, is the most interesting, because there are paths for us to exit at 2 to 3x multiple, or equity multiple to the LP, upwards to 14x. Now, we don't show the 14x. Okay, that is. We have case studies out there. There have been, car washes that have gone IPO. We definitely are building it with that end in mind, but that would be, something that we could do. We could scale this portfolio and IPO that, and leave the investor in. Or we can actually do a large private equity roll up to like a REIT or an insurance company or another private equity group. Now, that there, is going to get us, above that 3x equity multiple if we just sold each property individually. Okay, so there are just a myriad of ways that that we can exit this portfolio, but the one that we are already in negotiations with private equity groups as we scale this portfolio is to understand what they would need in order to buy that portfolio from us. Okay, so again, we're already building this portfolio with end in mind. All right, now this is the presentation that I did a couple months ago. I went through a bunch of 8 red flags to watch out for when you initially start getting investing, but this seems to be a pretty seasoned group, and I'm happy to talk through those things if you'd like me to. But the last little pillar here, right? We went through how does it protect capital, create cash flow, protect equity, generate tax benefits. We talked about inflation hedging. We talked a little bit about the use of leverage on these properties. The last piece here is that you have to invest with people that know the strategy. Okay, and this is I'm seeing a lot of people getting in the space that are leaping from multifamily into car washes, and I'm like, that's cool, but they're not the same thing. Like, how who's the expert on their team, right? Like, who's the person actually executing the strategy? So just know that, just pay attention that you want to be with people that have already been in the business, that are well seasoned, not only just in purchasing real estate, but actually developing and growing private equity businesses. You want to see, of course, invest with experts that have a great track record for execution, ability to perform. You want them to have the ability to close on these assets in nearly any market environment, and secure the credit and lending to do that. You want them to be able to pool reliably investor capital, because there's nothing more frustrating than to put 8 car washes under contract And then and they miss the raise, and there's no way they can close on the portfolio. All right. And then you want to make sure they have a good professional team and network under them to help service not only the asset, but also service the investor. Now, for us here, we have actually, over 40 team members now at passiveinvesting.com. But on our HRA car wash management side alone, we have over 170 team members already servicing our locations and working on behalf of our investors. So if you guys want to connect with me, find out a little bit more, jump on a phone call. Like I said, we have an asset open right now, available for investment. We'll also have another one. That asset is closing here really fast, but we'll have another one opening like towards the end of July. Jump on our list. You can get on that at passiveinvestingwithwhitney.com. I'll ask, how did you hear about us? Go ahead and put it in, Alex. That way we can, make sure to, as our team talks with you, they'll understand the context. But there you can actually get on a one-on-one call with me. You can join our free education and masterclasses. I'm actually doing a boot camp tomorrow on how to underwrite a real estate deal. So you guys should join that. And then you just get priority access to our deal. So again, we've got our Pick Car Wash 6 that's open. We got 7 coming up here in a few weeks once 6 is closed. So Alex, I'm going to leave it right there because I'm sure we have questions, and I can go through those individually.
Hey, Whitney, thanks so much. This is a pretty cool topic. We need to talk offline because selfishly I brought you on here because when I saw car washes, I said, oh crap, because my uncle builds these ones.
Cool.
He builds them, and he's been telling me we need to start a car wash for years. Like, he's the main engineer that puts everything together. He just doesn't have the business knowledge. Right. And I'm like, I don't know what I'm doing. I don't know. I know short-term rentals and maybe hotels, but like this is kind of, just outside of my realm here. But how did you, because you kind of have like a healthcare background too, started investing in real estate, but how did you fall into like investing in car washes?
Yeah, so I transitioned into private equity full-time in 2019, but was in the space part-time in 2017 before then. And so for me, I've been looking at ways to transition, up until that time, I had over 36 single family rentals and doing some flips on the side every year and just running myself ragged. And that's on top of working, right? I needed a smoother way to build cash flow, build equity, and get the tax benefits and get my time back. So that's how I transitioned in private equity. Once I got into the space, I was super heavy into multifamily. And then I was like, okay, as a limited partner investor, right? I'm a GP on deals, but I also invested privately in other people's deals as well. So I needed to, when you invest as an LP, once you have your goals established and your risk and your timeline, the only thing, you'll have 3 things to control. You have the ability to control what asset class you go in, right? Like, and generally that kind of like slims down your operator, what market you invest in, and then what deal you go into. And so for me, I was like, I started looking at my portfolio that way. And I'm like, oh man, I'm like 75% in multifamily. Fortunately, I wasn't 75% in multifamily whenever COVID happened, because the first 6 months of COVID, if you were 75% multifamily, you were like nail biting, right? Like, where's my cash flow coming from? What's happening to these assets? So that became, it became a way for me to help diversify my portfolio. Now, the way I think if somebody's getting into the, private equity space as a limited partner, I'd help them kind of orient, like, pick a core asset that you 100% believe in. And like for me, everybody needs a roof over the head. And then the next tier out is, we as Americans are going to take care of our belongings and our cars next. Everything past that kind of gets more towards what I call a momentum type investment, a little riskier, a little bit more swinging for the fences, but yeah, those core, anything that has to do with like a person and their belongings, they're going to take care of. So that's kind of how I got in the space. That's where I was like, yeah, I can see it. People need to take care of their cars. So.
And Whitney, so you mentioned you joined forces with passive investing and talk to other groups of individuals. Like, who do you see these type of investments really right for? Like, who are the people that are kind of jumping into these things?
Yeah, passive investing in general, like being an LP in a deal. When I talk to investors, it boils down to 3 types of people. One, they have a higher and better use of time, like how they're earning their income. Maybe they're a doctor, they're a lawyer, a high tech worker, high income worker, in some form or fashion. And so, they're pulling in 200, 300, 400, $500,000 or more a year, right? That's the highest and best use of their time. So, real estate then becomes like, how can they buy their time back in order to get out of the rat race, right? Or at least have that, make it work optional. Person number two is somebody generally that has, that sees the value of real estate, but they just like, I don't have time to do it. Maybe they're not like, high income worker, but they have a high net worth, bought a business, sold a business, whatever. So they were just like, I like real estate, understand real estate, but I am never going to be the one that's going to be like the landlord and do tenants, toilets, trash. So they just kind of jump right into syndication because there's no gold stars if you go buy your own rental first, right? Like, people see it as a sliding scale, but if I had the capacity and I knew about syndications when I got into real estate, I probably would have skipped the whole single family rental piece. Then the last piece is going to be like my tired landlords, the people that built up a portfolio of single family properties or, maybe some small multifamily properties and they're happy with what those properties gives them in the end. They're just unhappy with how much time and attention they take away from them. And so we're seeing a lot of people exit those portfolios recently and redeploy that capital into a, private equity deal like a syndication.
I have a question about recessions because everyone's worried about the economy. I mean, do you find, or has your research showed that like during a recession, are people washing cars less, or are they just still washing it just as much as they would any other time?
Yeah, actually, yeah. So there's data by the carwash.org. They probably have the most robust and longest running data set. In tough times, downturns, recessions. I mean, we have to use the term recession right now in this data pretty lightly because the last recession was 12 years ago. But we've had some blips in the economy. We've had COVID happen. And so during those times, we actually see two asset classes get utilized more, and then it's self-storage and car washes. And it's because people take care of their belongings. In that car, if you think about a car, your car is an outward projection of you, right? Like most people are more apt to keep their car in good repair and clean because they're hauling kids around, they're picking up friends, maybe part of their business requires them, like maybe they're a realtor and they're having to, take around clients, or they just want to be seen pulling up to work with a dirty car. So people now, that same person who takes care of their car might not take care of the house because their coworkers aren't coming over to their home. They'll take the coworkers out to lunch, right? So we actually see car washes usage actually go up during tough times for a variety of reasons. The behavioral part being one. The second piece, like as I mentioned earlier, it's just, they got to, if you're in the middle of recession and it's going to be a couple years before lending is going to open back up to where you can buy a new car, you got to take the one that you have and make it get through that time period. And then, like, oddly enough, like a lot of these car wash tunnels in the express car wash space, they're retrofitted with like lights, and they're actually a form of entertainment. We actually saw usage go up during COVID because, parents were taking their kids through the car wash. It was like, 5 minutes of fun. I know my daughter, she's 11, and every time my husband, goes and washes our car, she was like, I want to come. So.
Hey, Whitney, as we're here on this page, what can you explain a little bit more the masterclass and the boot camps that you have available, what that includes?
Yeah. So, as the director of investor education, and my background is in investor relations and investor services. But what I focus on now is not so much like placing people in investments, but helping them understand what passive investing is in general. How does this align with their goals, and what are the, kind of how to craft their portfolio? And so those master classes, the Passive Investing Made Simple masterclass, I do that every Tuesday live at 1 p.m. Mountain Time. And it's just a free, hour of time for us to spend together. We learn about educational topics for the first half hour. And the second half hour is a Q&A session. And the boot camps are more of a skill building workshop. So like tomorrow's skill building, we're gonna meet and we're gonna walk through how do you vet a deal. And it's not so much like a podcast style, But it's really about like, hey, let's take you from knowing and understanding to being able to apply and analyze and use that knowledge.
Hey, Whitney, so you've talked a lot about passive investing, but like, let's say someone wants to get a little bit more active and they want to be like a GP or something like that. Where do they start? How do they find deals?
GP on car washes?
Yes. Like, let's say they want to put a deal like this together. Like, let's say my
Yeah.
uncle, he's still telling me he could build this car wash and
Well,
I
he's
might
doing
want to
ground
be
up
active in
development.
it. Yeah.
Yeah. Ground up development, acquisitions, essentially it's kind of like, broker dealer relationships. How can you develop those and put together a track record to close? I would partner with somebody that's already in the space in order for you to build up your track record, right? On that piece. As far as ground up development is pretty capital intensive. So you have to make a decision initially up front. Are you going to do a ground up development under a franchise, or are you going to have to do that? Are you going to develop your own brand? Okay. And so are you going to own the land or not? And who's doing all the management, right? You're going to have to, kind of figure out all those pieces. And some of those pieces, the branding and the land, you're going to have to figure out if you're doing acquisition strategy too. Now, excuse me, I looked up some numbers several months ago, and the typical to buy into a franchise and kind of get their own package to put together, I think starts at like 1.5 million. And then you got to have the land and then the personnel and all that ready to go once you execute on that development strategy. So you're going to need to either have that bankrolled, get a loan, or bring in investor capital in order to get that going. But it's definitely doable. There are franchise opportunities out there. But like I said, they come with their own issues, right? So you need to understand, the limitations of scaling a portfolio that way through a franchise opportunity.
Franchises, like, have you guys considered creating your own franchise?
We get asked that. It is something that we are aware that is an opportunity for us. But currently right now, no, but it is, it is a way for us to continue to scale the portfolio if we need to do that at some point in time. But right now we're doing all direct ownership.
Yeah. Because I can't think of a franchise out there. Like if I really think of a major one, that's the one I have to go to. So
yeah, Zips Car Wash is one. Mr. Car Wash, they're Zips and Mr. Car Wash, I think both IPO'd. There's several other brands out there, and brands are developed regionally as well, right? Our brand, right. And so I'll show you guys right here. Our brand is the Hurricane Express Car Wash, and that is that's the brand that we use primarily along the coast. So like we have car washes up in Maryland all the way down to Florida, and then with Car Wash 6 portfolio, that is we've extended out to Alabama, and then with Car Wash 7 portfolio, that'll extend us into Texas. And so you'll see that brand all applies. But as we push into the interior United States, you'll see a second brand develop, and it's called Sparkle. We have 2 car washes already under the brand Sparkle. But we're really concentrating on building out, he who chases 2 birds catches none, or maybe it's 2 rabbits. Either way, we're focusing on one first before we get the other one going.
Whitney, you mentioned a bunch of different markets right now. Like, what are the top 3 hottest markets or the biggest markets that you guys have seen a lot of growth in with these car washes?
Well, car washes really have grown like all across the East, like, kind of like east of the Mississippi, Texas. I mean, they're starting to really pop up here in the Midwest. I would say, the Western states have been pretty slow growth. For us on how we're developing, we decided to take an approach and keep all of our portfolio for the first couple years of developing the portfolio within 2 hours of our home office in Columbia, South Carolina. And so that way we could really pay attention and give them the time and attention they deserve in order to get the portfolio stabilized and moving in the right direction. But as we move, we will continue to push out into other areas and develop that way. But the car washes can really go anywhere. I would say warmer climates tend to prevail. But I know people that are developing in Minnesota and New York. And so, certainly you can develop, pretty much anywhere. Just, I would expect your income to be more seasonal.
Okay, Whitney, so I'm going to ask a loaded question because I think it's what a lot of people want to hear. But you've invested, like your single family portfolio, did some fixed flips and then multifamily. And you talk about these margins being so much better or pretty good, like with car washes. I mean, are you finding that you're generating more income, like focusing in on car washes, or are you just trying to like diversify your portfolio with multifamilies?
Yes. Then I'll tell you the why. It's just kind of like a yes, and then also the classic answer, it depends. So right now, especially like how we have developed the group, at passiveinvesting.com, we have over 3,500 multifamily and 6,600 self-storage. But the markets cycle, and so we had to take a look back at really when COVID started happening. We are already seeing the narrowing of the cash flow, right? Cash flow was being compressed on multifamily assets. That happened well before COVID started, and it's accelerated since. So we were looking, what is the market giving us right now? And that's where it was like, we researched several different things, hospitality, looking at hotels, looking at various businesses like laundromats and car washes, what area of car washes. And this is really the area that we landed on. So it is a way for people to build their portfolio right now to get cash flow and equity and tax benefits as they wait for multifamily and self-storage asset prices to reset. And when those cash flows, rents have grown enough to where there's more cash flow there. It's also a way for people to diversify their portfolio. Getting into multifamily, 2015 to 2020, early 2021 maybe, was amazing. So I mean, but again, that's this is just part of the cycle. So what is the cycle giving us? So that's how we're looking at it.
Awesome. Well, thank you so much, Whitney, for all of your information about this. I know this is something that we haven't brought to our group before. So for anyone who missed any of the early intros, this whole recording will be available on both Alex and my YouTube channel. So you can access it there. And then we'll both send follow-up emails with additional information of resources, this PowerPoint, how to get a hold of Whitney. Thank you so much, Whitney, for coming on. Alex, any final parting words?
No, we're good. Meet up again next month. But Whitney, where can people get a hold of you one last time?
Yeah, you can reach out to me. Here's my email, whitney@passiveinvesting.com. The quickest way is to go to the passiveinvestingwithwhitney.com website. I'll pop that QR code back up there. But go there, fill out a quick little form, and you'll get immediate access to my calendar that way. We've got the masterclass, or excuse me, the boot camp happening tomorrow for those people who are here live. If you're wanting to be in that boot camp, email me at whitney@passiveinvesting.com. That way I can get you that registration. Otherwise, you can see it afterwards. Otherwise, we do have our Car Wash 6 open. We have a limited space in that. It's closing this week. And then we'll have our Car Wash 7 opening towards the end of July.
Awesome. Thank you so much. Thanks everyone for joining us. We'll see you next month. Have a great night. Take care.
Thank you guys. Take it easy.